Right now, we're seeing the largest number of homes for sale in British Columbia that we've seen in years. Active listings across the province have climbed to over 45,000, a number that fundamentally changes the balance of power in the market. But as startling as that number is, it isn't the most alarming part. What's truly sending major warning signs to everyone, buyers, sellers, and renters combined, is a dynamic behind the numbers. While inventory has been climbing, sales have been struggling to keep pace, remaining well below the 10-year average. This widening gap between supply and demand is creating the perfect condition for a market correction. Now, this video isn't about predicting a crash. It's more about preparation and looking for opportunity. For the first time in years, the market is sending clear, undeniable signals that the era of frantic bidding wars, unconditional offers, going over list price, they're kind of over. The shift will define the next 12 to 18 months, and it's already begun. And in this video, we're going to break down the 3 key indicators you need to watch: the inventory overload, the controlled price reset, and the looming mortgage renewal pressure. And most importantly, we'll cover what this new reality means for you in this market. Let's start with the headline number: inventory. Across British Columbia at the time of recording, there were over 45,000 active listings. To put that in perspective, that's a significant year-over-year jump. And active listings are trending at some of the highest levels we've seen since 2014. This isn't a trickle, it's a steady surge of supply that has been building month over month. But raw inventory numbers only tell half the story. The real metric to watch is the sales to active listings ratio. This is the number that tells us how much of the available supply is actually being sold. For a balanced market, you generally want to see the ratio sit between 12 and 20%. If it dips below 12% for a sustained period, it signals a buyer's market where prices will likely come under downward pressure. As of the last report, the overall ratio in BC is hovering in the low double digits, sitting around 14.2%, so getting very close to that buyer market territory. In some crucial markets, like Greater Vancouver, the ratio for detached homes has been even lower at 11.3%. This tells us that for every 100 detached homes in that market, only 11 are selling each month. This leads to another critical indicator: months of inventory. This is how long it would take to sell every home currently listed if nothing new came on the market. We've seen this figure climb over the last 7 months in some regions, and it's a stark contrast to the 2 to 3 months we saw before the peak of the frenzy. So what does this all mean in plain English? It means the power has shifted. Buyers now have something they haven't had for years: choice, time, and leverage. The fear of missing out has been replaced with the fear of overpaying. Now, you might be wondering, why is this happening and why it's the perfect storm? Well, this inventory surge didn't happen in a vacuum. It's the result of the perfect storm of economic factors that had been brewing over the last 18 months. First and foremost is the impact of higher interest rates and mortgage renewals. A significant wave of homeowners who secured mortgages at record low interest rates a few years ago are now facing renewals at much higher interest rates. This payment shock is forcing some households to make some tough decisions, like selling their property to lock in their equity rather than facing financial strain. Second, buyer demand has softened considerably. The same high borrowing costs that pressure sellers are also sidelining potential buyers. Economic uncertainty has made buyers far more cautious. The province's unemployment rate has ticked up, and while migration is still a factor, the pace has slowed. Buyers are no longer willing to jump into the market unconditionally. They are taking their time, adding subjects, and negotiating on price. And finally, we have the psychological factor. As more for sale signs pop up and headlines talk about softening markets, a feedback loop is created. Sellers, fearing that they might miss the boat, rush to list their homes, adding to the inventory pile. Buyers, seeing this growing inventory, decide to. This mismatch in sentiment is a powerful force that can actively push the market into a correctional phase. So, with inventory piling up and demand slowing down, are prices falling off a cliff? The data simply says no. What we are witnessing is not a crash, but a controlled, gradual reset. Across BC, the average home price has been drifting, with recent reports showing only a slight year-over-year change. In Metro Vancouver, for example, the benchmark price for all residential properties saw a decrease of 3.4% year over year as of October 2025. Detached homes in the same area were down 4.3%. This is a crucial point. This isn't a collapse. It's not a mass reset. It's more of a light correction and an adjustment. Some are calling for steep price drops, but BC's market has shown some pretty major resilience. While prices in the most expensive areas like Vancouver or the Fraser Valley are feeling the most pressure, other regions are holding up better, like Victoria or Vancouver Island, for instance. The regional nuance to all this is critical. BC isn't one single market, it's a collection of micro markets, each with its own unique rhythms. What's happening in downtown Victoria or Vancouver is very different from the Okanagan or Nanaimo, but the overall trend is undeniable. The days of 20% year-over-year price gains are probably firmly in that rearview mirror. Prices are now slowly adjusting to new realities of higher inventory and cautious demand. Detached home prices in Metro Vancouver have already dropped below the psychological barrier of 1.92 million. And this is a clear signal that things are softening. This is a market that's finding a new floor. It's a soft deflation, giving everyone some time to adjust, which is far healthier than some sudden pop of a bubble. Now, navigating this kind of market can be incredibly overwhelming. Headlines swing from panic to optimism every other day. This is where having a clear strategy matters more than ever. If you're trying to figure out how these trends affect your specific situation, whether you're thinking of buying, selling, or renewing or refinancing an existing mortgage, or just looking for some information, this is a conversation we should be having. There's no pressure, just data-driven advice. So if you're into it, click the link down in the description below where you can book a one-on-one free consultation with me and my team, where we can take a look at what your plans are and how we can help you achieve them. Now, let's get back into what this all means for you. If you're thinking of selling in the next 12 months, the game has completely changed. The strategy of listing on Thursday, holding an open house on the weekend, and receiving a dozen bully offers on Monday is kind of over. It's time for a new playbook with this, one that's grounded in today's reality. First, price is everything. You have to price your home for this market, not the market 6 months ago. With over 45,000 other listings competing for attention, an overpriced home is just simply going to get ignored. Your first 2 weeks in the market are your most important. If you price it too high, you'll end up chasing the market down, likely selling for less than you could have if you had it priced correctly. Second, presentation, non-negotiable. When choices were limited, buyers might have overlooked a home that looked like it needed a ton of work, but in a market with massive amounts of inventory, they won't. Your home needs to be decluttered, professionally cleaned, and staged to perfection. Buyers are looking for turnkey properties in a lot of cases because they have the luxury to be picky and they have the luxury of time right now. Any objection from a scuffed baseboard to an overgrown lawn is a reason for them to move on to the next listing. Third, be prepared for a marathon, not a sprint. The average days on market has been extending and getting longer. Your home may sit for weeks or even months before you get a serious offer. This requires patience. It also means being ready to negotiate. Buyers are coming in with conditions such as financing, inspections subject to sale, and they're not shy about putting these on their offers. The seller who understands this and is willing to work with a reasonable offer is the one who's going to be successful and make moves. The era of a seller-dominated market, well, it's kind of over. Welcome to the age of cooperation, folks. For buyers who have been sitting on the sideline, frustrated and exhausted, this is a moment for you. This warning sign for this market is a massive green light for you. A window of opportunity is opened, and it's wider than it's ever been in years. Your primary advantage is choice. Instead of fighting over 1 or 2 new listings, you might have 10 or 15 to choose from in your desired neighborhood. This allows you to compare properties without the intense pressure of an impending offer deadline. You can take your time, do your due diligence, and make decisions based off logic, not emotion and pressure and panic. Your second advantage is negotiating power. With the sale to active listings ratio tipping into buyer's territory, you are in the driver's seat. You can write offers and include conditions of financing, home inspection, and even subject to sale of your own property if you want. You can negotiate on price, closing dates, and inclusions. Don't be afraid to make an offer that you feel is fair, even if it's a little bit below or maybe significantly below the listing price. In this market, many sellers are more motivated by a firm, conditional sale than by holding out for an unrealistic number. Now, some of you may be asking, should I wait? Will prices fall further? Well, some analysts do predict further modest declines over 2026. Trying to perfectly time the bottom of the market, though, is a bit of a fool's errand. A home is first and foremost your place to live. If you find the right home for your family in the right location and the numbers work for your budget, now is a fantastic time to buy, with a level of calm and control that was impossible just 2 years ago. And how do you achieve all these things, you might ask? Hire a realtor, and hire a good one. Interview them, talk to them, find one that you like to work with, And if you'd like a recommendation, give us a call. I've been doing mortgages for over 15 years with a company that's been doing it for over 35. We've met a ton of realtors, and we would be happy to put you in touch with one. So let's bring this all together. The British Columbia housing market has seen a clear signal. The surge in inventory isn't just a statistic. It's a fundamental shift in the market's structure. Statistic. Good Lord. This is not a story of doom and gloom. It's a story of normalization. Prices are slowly adjusting, not collapsing. Buyers have regained a voice. Sellers need to adapt to a new, more competitive landscape. And for homeowners, the key message is preparation, not panic, especially as mortgage renewals approach. For the next 12 months, the most important indicators to watch will be the inventory levels and the sales to active listing ratios. These will tell us if the market is absorbing this new supply or if we're in for further corrections. Forecasts suggest that sales may begin to pick up again in 2026 as interest rates stabilize and pent-up demand returns, but until then, this is a market that rewards patience and strategy. Preparation always beats out prediction. Understand the data, know your numbers, and have a clear plan. My job is to help you navigate this data and stay ahead of these market shifts, not just react to them. If you found this breakdown helpful, make sure to subscribe to the channel and hit that like button so more people like you can see this video, and so you receive more monthly BC market breakdowns on real estate, mortgages, wealth building, and everything in between. And if you're ready to create your own personal strategy, let's talk. My contact details and my booking link will be down in the description below. Thanks so much for watching. We'll catch you on the next one.